This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. First, let's talk about silver. Since I did a post, as you know, but I've been talking about this. So we've got a big deal as it relates to gold, silver. They are collateral trades, no question about it. And when stuff starts to break, the metals sell off. We also have had a very firm dollar and yields as a backdrop with rising oil. And that is also an issue for rising metals. And there are other reasons, and I wrote about them. But suffice it to say that I had given SLV a price target of 61. Remember, I said this is going to hit with an overshoot to 58.56. Maybe we have a little bounce back up to the 65 area. Well, long story short, we have hit 59.31 pre-market. So it did drop about 12% from yesterday. It had already started to roll over. And you know, I have a write-up on this, which is related to this head and shoulders that I started seeing forming on gold right here. This is gold. And I thought maybe you'd like to see all of them because everyone trades totally differently. But we got continuous contracts for gold. And I had mentioned I would not be surprised at all for this to come back down into the 4,600 level. We've got silver. Also, once it's back inside this kind of 83, it heads for 71. It breaks 71. It heads for 65. If you're more focused on gold dollar, and this is on a weekly, there we go. All right, so here's gold dollar, and I also warned it's coming back into this 47.80. It breaks 47.80 for XAU USD. It'll proceed lower into 45.50 area, which is basically that continuous. It's right here. You can see the daily. These are the levels. It's coming right in, and if we break this monthly, it's a big deal. It'll have further to fall. So depends on what you prefer, but I'm just kind of giving you these levels. There's XAG USD, which is the silver dollar pair trade. And you can see right down here, there's the 200-day comes in about the same place as a trend line, about 65,000 for XAG USD versus a little bit different consideration here. It really needs to get and stay below 47.80 for XAU USD, which is gold dollar. Anyway, if you prefer, you've got some other opportunities here with GLD. I have already posted in February. I saw it coming back down into 418 with an overshoot. I can actually see a bigger overshoot now. And by the way, this is on a monthly. This is on a daily. You've got to break down into 418 GLD incoming. Here's GDX. I already went over these as well. Big reversal candidates on the monthly. And basically, you've got the reversion to the mean trades across the board for GDX, for GDXJ, the gold miner, juniors, silver, SIL miners, silver juniors, SILJ. So you got it going on here. Anyway, you got the point. So collateral trade is one reason, higher dollar is another reason, but also settlement outside of these central banks that have been very much transacting outside of the US dollar. Now, with the Strait of Hormuz closure, there's more pressure. Number one, the retail crowd that was massive, Asians mostly, accumulating in gold and silver from their savings are now forced to spend more from all this inflation-induced energy crisis. You have central banks, big driver of de-dollarization flows. Now they have to revert and conduct either in yuan outside of the US dollar system or in dollars. The point is we've got a situation where I'm watching very closely with China since they are affected by this, even though they did a great job of building up massive inventories in oil. Long story short, they have restricted exports to their neighbors. No more refined products out the door. That's going to hurt Vietnam and others greatly, which is, by the way, going to really take a hit to retail trades like the Nike and others. They're going to not do well. We're going to go over a lot of charts, but basically, what is China going to do? They're getting oil from Iran for a little bit until Trump escalates in the seas. They're getting oil from Russia. They have a huge electric grid through solar and alternatives. That's super, but it's not everything. They are still an exporting economy and they are still energy dependent. So we have to watch this very closely for a yuan devaluation, which I think, I didn't write about this, but this is one of the reasons why gold might be dropping. And I didn't think about that until this morning. But another reason why gold could be dropping is in a potential yuan devaluation threat that happened in 2015. It was a sudden move. We had massive volatility. Global markets fell, but in particular, commodities were crushed. So anyway, I am on the lookout for maybe that type of risk coming in on this precious metal miner misery that we can see now very clearly. There's my 61.16. I've been waiting for you. And you can see where gold is right now at 45.60 continuous. This is a big deal. So we literally just talked about this, a head and shoulder, and how it was forming, and a measured move would bring it from, that is collateral, man. So a measured move is 4,500, which is where we almost are. So gold has come back down into this 46, big orange kind of neck of the woods, overshoot with 45.63 on gold. That is where it should digest a little bit. And silver has also formed a big dangerous reversal, though that's unfortunately a very large reversal pattern. And if the dollar yuan revaluation is a foot, then silver will very likely move lower. So I'm talking down here into this neck of the woods. So don't be surprised, even though it's hugging right now, 71 area, overshot into this 66 area. This is a channel right now. Very likely we head back down into the 50s, especially with a yuan deval. All right, and there's my reversion to the mean. This is an actual geometric mean on a monthly gold to silver ratio, and it is coming back into the mean, which is what I'm expecting will be about when the dollar stops going up, maybe, or the war is over, maybe, or the collateral trade liquidation event is over, maybe. But the long story short is, remember how this was 70% above the mean? And January 28th and 29th, we happened to catch that live. Okay, groovy. We had a bounce in February, and then this is March. Reversion to the mean is now serious, and it's not done. We have a ton of metal volatility. Let me just show you what's going on here. Ton of metal volatility, SLV, all the ones that charts that I showed you. And I did that so that you could trade whatever it is you want to trade. Yes, it's hitting copper. Yes, it's hitting uranium. This is actually a global energy crisis, and miners are thusly affected. Look at uranium right here. This beautiful, beautiful trend breakout. Basically, this has been a trend breakout for me anyway since November of 2020. But the point is, this beautiful advance since this April 2025 bottom. We need energy for data centers. Anyway, the point is, this is retreated all the way back into September 2025, and it's breaking. They're going to do this. This is a massive deal that's going on, and nobody's really talking about the massive energy demands that are unable to get met because uranium takes 10 years to go build out. Anyway, we've got example, that SBSW that I showed you. This chart that client Jose and I were talking about, catalytic converters. It's gold, but it's byproduct, very, very focused on platinum and palladium conversation I had yesterday, and he sent me the report today. The point is, you've got a big, huge hit in these plays, and yesterday it was just on this trend line. Today it's clearly broken, coming into basically Keltner channel on the weekly, but you can see this is in free fall underneath this 200 day. Now, would it typically, you short into the 200 day? Well, this is obviously clear below it. This is where you can have a snapback rally into 13 before it rolls over again. You can have a snapback rally in a lot of the uranium hasn't even sold up off as much. And then copper, this is tough. And when someone asked yesterday, when is it safe to get back into CPER and FCX? And I'm like, once the dollar stops going up with yields and oil, because this is still a big, big hit. Copper, all the miners. AEM, we just talked about this one coming back into 187. TAG, AGI, right here, almost there, 37.54. And Wheaton, almost there, 113.72 for WPM. GLD, I posted levels and such. Right now, we've got a nice trend line, 21 week. We could have a little bounce. We've got my 418 that just triggered. We've got a 100 day that hasn't even flattened yet. We have a 200 day that hasn't even flattened yet. So for most trend long traders, they are not going to care. This is still in play. I think it's breaking down. So I can see more risk coming in than I'm comfortable. So not just these levels that I gave in February, but Yuan devaluation, dollar is still not even above 100.5. So I'm definitely going to be more conservative on this. I think we're going to have issues with metal volatility seeping into equity volatility.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.